$452.75. If I type that in here and hit enter, it gives me the projected amount that this stock will move up from 326.95 to 452.75 with a 16.05 earnings per share. That is a 38.48% increase. Hey guys, in this video we're going to be going through a company that's at its annual low price, and we're suspecting that it can move up. And that stock is Adobe Inc. Now, Adobe Inc. is currently at $326.95 a share. And like we said, it's at its annual low price right now. We want to look at it and see if it turns around and starts to move back up. And when it turns around and starts to move back up, now bear in mind this is a weekly candlestick chart. So every candle represents a week. When it turns around and starts to move back up, let's say 2 weeks or 1.5 weeks, that may be our opportunity to jump in. In any event, let's jump into the fundamentals and take a closer look at Adobe Inc. And so we're at the Stock Sage app, and we're going to look at Adobe Inc. in here. Now, bear in mind, the Stock Sage app is an app that we can use to find fundamentally sound stocks. If you go to stock buybacks, where you could see stocks that were bought back for the last 5 years, current liabilities above current assets above current liabilities, to find stocks with strong balance sheets. And we can even pick profit margins, which are greater than 10%. Notice we have a pretty long list here, but if we choose profit margins greater than 10% for the last 5 years, that list gets a little smaller. It shows us all the stocks that are on that list. But we're gonna, since we don't have Adobe showing in the list right now, we're gonna just type in the ticker symbol and do a search for it. And if we look right here at the top, it tells us what the company does, what Adobe does, which they do a number of things. Now, along the top, we have the earnings per share for the last 5 years, 2020 through 2024. We prefer a company where the earnings per share is growing every year, or just about every year. And Adobe Inc. just about meets that category. In 2020, it was $10.94 a share. 2021, $10.11. 2022, $10.12. 2023, $11.88. 2024, $12.44. And so far this year, it's estimated at $16.05. So, The earnings per share dropped slightly from 2020 to 21, but it's moved up since then. Also, notice 2020 was a COVID lockdown year. So here's a year where a lot of businesses were losing money or even closing. But this business managed to make a healthy amount that year. Now, we also see in the app what the low prices were for each year and what the high prices were for each year. And if we look at the bottom, we'll see what percentage increase that was. It increased by 110% in 2020, 66% in 2021, 109% in 2022, 98% in 2023, and 47% in 2024. Also, there is a projected section. In the projected section, you can put down an amount that you feel that stock is going to move up to. For example, I'm going to go to Yahoo Finance. Enter the ticker symbol for Adobe. And then I'm going to see what Adobe projects that this stock will move up to in the next year. $452.75. If I type that in here and hit enter, it gives me the projected amount that this stock will move up from 326.95 to 452.75 with a 16.05 earnings per share. That is a 38.48% increase. So we can get all that information from the top of the app. However, when would be a safe time to buy this stock? We can't tell that from the stock's low price because the low price is changing every year. But something that's more predictable is the low price earnings ratio or the low PE ratio. It was 23 in 2020, 41 in 2021, 27 in 2022, 26 in 2023, and 34 in 2024. So, the lowest that this PE ratio has been in the last 5 years is 23.33 in 2020, the COVID lockdown year. So, in all probabilities, we could say that this PE ratio will not drop below that. However, if we look at the current PE ratio, it's 20.37. It's already moved below it. So it's gone against the probabilities. Which means, can the stock drop further? Yes, it can. But is it possible that it's going to turn up at any time and start to move back up? It's highly possible because it's already at a lower PE than the lowest PE in the last 5 years, including the COVID lockdown year. So, based on price, I would definitely say that this stock is a buy as long as we see on the candlestick chart it's starting to move back up. Now, there are three other things that this app shows us: the income statement, balance sheet, and cash flow statements for the stock, which tells us how fundamentally sound that company is. Because when a company is fundamentally sound, you're going to get more solid investors in it. And that's when the price goes up, when more people are buying than selling. So let's look at our balance sheet or our income statement. If we look at our income statement, the most important thing is the profit margin. Most companies on the stock market have a profit margin of under 10 for the last 5 years. Rarely will you get ones with above 10 for the last 5 years. If you're getting above 10 for the last 5 years, I would say that's good. If you're getting above 20 for the last 5 years, I would say that's great. What is Adobe Inc.'s earnings or profit margin for the last 5 years? 2020, 40.88, 2021, 30.55, 2022, 27.01, 2023, 27.97, and 2024, 25.85. I would say that their profit margins are great. Now let's look at the balance sheet. And with the balance sheet, we're looking at assets and liabilities. But in this app, there's sort of a shortcut to looking at that. We want the assets to be above our liabilities on the balance sheet. But one thing that we can look at quickly, and we can apply the same rule: above 10 is good, above 20 is great. Return on equity. In 2020, 39.66. 2021, 32.59. 2022, 33.85. 2023, 32.86. And 2024, 39.42. So the return on equity is good. Now let's look at the debt to equity. And with the debt to equity, I like for it to be below 200%. If it's below 200%, the rest of the balance sheet should look pretty decent. In this case, 2020, 83.08. 2021, 84.10. 2022, 93.33. 2023, 80.28. And 2024, 114.32. Not only is it below 200% for all 5 years, it's below 100% for 4 of those years. And we see when looking at the current assets, everything that the company owns, against the current liabilities, everything the company owes, and these are current is under a year. We see that the current assets exceed the current liabilities 4 or 5 years. Then we go down and we see that the total assets exceed the total liabilities for all 5 years. So I would say it's a pretty decent balance sheet. Now, when we get to the cash flow statement, this company does not pay a dividend. However, we want the company, as investors, we love when a company buys back shares of its own stock, and we hate when they sell more shares of their own stock. In this case, the company is doing both. But what we want is them to be buying back a lot more shares than they're selling. And in 2020, they sold $270 million worth, but they bought back $3,050 million worth. That's good. 2021, they sold 291 million worth. They bought back $3,950 million worth. That's great. 22, they sold 278 million worth. They bought back 6,550 million worth. 2023, they sold 314 million worth. They bought back 4,400 million worth. And in 2024, they sold 209 million worth. They bought back 9,500 million worth. So the company bought back a lot more shares than they sold, which we love. The free cash flow, I don't pay much attention to, except for when they pay a dividend, because companies pay dividends from their free cash flow, and this will let you know if they can afford to pay that dividend. If they can't afford to pay that dividend, this last line, free cash flow after dividend, will be a negative number. None of these are negative numbers, and they don't pay a dividend, so I'm not concerned. So we've looked at the financial statements for the stock. However, there are some areas, there are some things that you may want to fill in for your analysis, which doesn't automatically pull into the app. There is actually text boxes for you to fill that in. For example, inside investors and institutional investors. I'm going to go back to Yahoo Finance and I'm going to choose statistics. And if I scroll down, it says held by insiders 0.20%. And by institutions, 86.48%. Now, let me explain what those are. Inside investors, those are people who work for or are part of the company. And usually that's a very small number. It can often be under 1%, which it is now. The reason it's such a small number is because the amount of shareholders is so large. For example, how many shares of this stock are currently out there? 418,603,009. So, this company is owned by 0.20% of, was it 418? Of 418 million. Now, the institutional investors, those are large banks and institutions who own this stock. And that's a lot higher, it's 86%. Now, bear in mind, large banks and institutions, they have very smart people who do their research into these companies to tell them what stocks to buy. And they're not fickle investors who are going to buy some and just sell it because it moves a little. They're usually buying millions, they're holding it for a while. So when a company has large institutional ownership, you as an investor like that. And Adobe Inc. has 86.48%. They're not paying a dividend. Now, there's other information that you may find helpful in your research that you can enter into this app. And information like that you can find out simply by you could do a Google search, but I find it more effective to just use AI like ChatGPT to find out this information. What kind of information? Well, under management, Shantanu Nayaran is the chair and chief executive officer of Adobe Inc. He became the CEO in 2007. Why is that important to know when he became the CEO? Because our analysis on him started in 2020. So, it would be significant to know if the CEO running this place just became CEO last year or he's been CEO in all the years we've analyzed it. Let's go down to the competition section. While Adobe is a major player in creative software and document experience workflows, Microsoft is much larger overall. While Adobe is focused more narrowly on creative software, document workflow, and digital experience tools, Salesforce and Oracle are broader. broader enterprise software, cloud companies, CRM, ERP infrastructure, cloud services, and thus operate on a larger scale. Because when you're researching these companies, you want to know what other companies are in their industry and sector and which ones are the top ranked in terms of competition. Are you getting the top ranked one, the second, the third? Well, in this case, Adobe falls into a number of different industries. That's why we have a few different names, like Salesforce, Oracle, Microsoft. As far as the future of the company, I think Adobe is positioned fairly well for the next 5 to 10 years. Its moat gives it defense, moat meaning something that protects it from people competing against it. It has a competitive advantage that people can't reach. Its moat gives it defense, and its push into AI and enterprise gives it offense. However, I will be cautious about expecting very high growth rates, for example, 20% annually, because the base is large and competitive. Or I should say, because the base is large and competitive pressure is real. A more moderate growth scenario, say mid teens or low teens percentage, seems realistic. Now, with AI coming in, Adobe is facing some competition, not insurmountable competition, but is facing some competition. That's why they're saying they would expect, say, mid-teen to low teens in terms of profit margin, more realistic. In any event, that is our stock analysis on Adobe Inc., found in the StockSage software, which you can find at the above website. In any event, guys, have a great day, and I look forward to speaking to you in the next video.